Thanks for clicking! The Bank of Canada's recent rate cut is not enough to get Canadians to jump into the real estate market. This according to a recent study from Ipsos market research.
You're going to be sorry.
Indeed, the poll, the first to be run since the central bank cut rates last week, sought to understand how would-be buyers would react to that rate cut.
I don't give a
And while the poll found that non-homeowners are not responding overly optimistically to the Bank of Canada's cut, it comes along a new poll from Bloomberg, which found that consumer confidence is increasing, with, according to Bloomberg, future expectations improving on a widespread bullish real estate sentiment. So, with widespread bullish real estate sentiment, consumer confidence is increasing.
You are my whole world.
Though, as we'll see, Bloomberg is using a fairly liberal definition of widespread bullish sentiment. Given the extent to which the media is pushing the idea that this rate cut will spur demand in the real estate market, it's worth taking a look at where consumer sentiment stands right now. So what I want to do today is take a look at that widely reported poll coming from Bloomberg, go over the less optimistic and even far less reported poll coming from Ipsos, and then discuss some implications. The extent to which the Bank of Canada is going to be able to cut interest rates is going to be largely dependent on Canada's inflation data, due out in a couple of weeks. We'll obviously have an update out on that data on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into this poll. On to the polls. First up, the one from Bloomberg, which found that consumer confidence in Canada has reached a 2-year high.
bullshit.
Now, I should note that the poll, which was widely reported as indicating an increase in consumer confidence, most of the responses were taken pre-rate cut. Though, says Bloomberg, that cut was widely anticipated, so it still counts. And, according to Bloomberg, the poll found that future expectations are more positive than average, largely due to evidence of widespread bullish real estate sentiment. And then, Bloomberg didn't say anything else about the real estate market. So, Canadians are more confident on the economy due to a more bullish outlook on real estate, and then nothing about real estate. And when I see a disconnect like that, an assertion without evidence, I go straight to the poll itself. Looking at the poll itself, we find that respondents were asked in the lead up to the rate cut if they thought real estate prices in their neighborhood would go up in the next 6 months, with 49.1% expecting values to increase. And while I'm not sure that less than half of respondents thinking prices are going to increase indicates widespread bullishness,
Sure does.
sure, consumer expectations are getting better as widespread bullishness on the real estate market ensues.
I'm gonna say the day.
Except that's not the case. If we look at the week prior, 49.3% thought prices were going to increase, 49.9% the week before that, and 50.4% a month ago, back when Bloomberg was celebrating a 100-week high in real estate perceptions. So, as perceptions about the strength of the real estate market actually decline, Bloomberg reports that expectations are positive, largely due to widespread bullish real estate sentiment, which obviously isn't the case given that the confidence in house price growth is declining. In fact, looking at this data, one could make the case that confidence in the economy and perceptions about real estate prices are negatively correlated, in that as consumers become more confident that house prices aren't going to skyrocket, they become more confident in the economy.
Did you me? Take it easy.
Which obviously doesn't work either, as we can't derive causation out of a basic correlation.
Really?
Regardless though, the widely reported poll, said to show growing optimism about the real estate sector, showed exactly not that. Is AI writing these articles and making mistakes? Is this purposeful? Is this gross incompetence?
That's what I do.
With that said, we do have another poll from Ipsos, which was ran following the Bank of Canada's rate cut announcement. And, although far less reported, shows that non-homeowners aren't exactly responding to this interest rate cut. The poll found that only 6% of non-homeowners would consider buying a home if the Bank of Canada cut rates by 0.25 to 1%. 25% of non-homeowners said they would consider entering the market, but they would need to see rate cuts between 1 and 4%.
Couple months?
With another 45% saying they couldn't afford to enter the market, even if the bank cut more than that. Now, Ipsos doesn't tell us what percentage of the overall poll were non-homeowners, so there's only so much we can glean from this data, but 6% of those that don't already own a home is a fairly small number. especially considering that 6% would need cuts in the range of 25 basis points all the way up to 100 before entering in the market, which even the most recent Bank of Canada market participant survey shows won't happen until at least December. So, despite what we're hearing from failed monorail salesmen that a single rate cut could be a catalyst for the market taking off again, this poll says maybe not so much. And while on the topic of failed monorail salesmen, the results from this poll are remarkably similar to one we saw from LePage a few months back. That poll found that of the 27% of Canadians that had been active in the market, 56% of those had put off their plans to buy a home due to interest rate hikes. And of that 56%, only 28% would be returning if they saw cuts between 25 and 100 basis points. So, if Canada were 100 people, only 27 of them had been active in the market. 56% of that 27, or about 15, are left, and of those, only about 28, or 4.2 people, are coming back when the bank cuts by 25 to 100 basis points. So, we have 4.25% of Canadians coming back when the bank cuts rates in the LePage poll, and only 6% of non-homeowners coming back to the market when the bank cuts by as much as 100 basis points in the Ipsos poll.
Listen to what I'm telling you.
The numbers coming from the LePage poll are going to be at least a little bit more reliable, as they spoke to those who at least at one point in time had been in the market. But still, judging from both polls, we can see that a mere 25 basis points, even 50 basis points worth of rate cuts doesn't bring the hordes back to the real estate market.
Oh, they're coming.
Further, for those who are waiting it out, waiting to see which way the wind blows after the Bank of Canada cuts rates, the poll also showed that there are some stresses showing up in the market, with 33% of mortgage holders concerned they might not be able to make their payments upon mortgage renewal. This, combined with a recent report coming from Equifax showing that late payments on mortgages are surging, shows that we could very well see a larger amount of inventory next year, with some homeowners unfortunately needing to downsize. So, on the one hand, we have the widely reported Bloomberg survey saying that Canadian consumer expectations, Canadian consumer confidence is getting better, especially amid a bullish real estate market, though that narrative doesn't exactly match its own data. Then, we have another poll from Ipsos showing that, at minimum, Canadians are waiting for more cuts, that a mere quarter-point cut isn't going to get it done, isn't going to be enough to lure Canadian homebuyers back into the market.
Don't ever call here again.
And I think that's definitely possible. I noted in a previous video that my gut says that buyers are going to wait out the spring and summer real estate market. The spring real estate market is just about over, summer's upon us, they haven't bought yet. I don't see hordes of new buyers coming into the market on a mere 25 basis points worth of cuts. Buyers have also seen the major renewal problems that we have coming up in 25 and 26. Why not wait that extra 4, 5, 6 months and see what kind of inventory, what the prices look like when the winter market comes along? That's just my guess, that's just gut feeling. I don't have any actual hard evidence to suggest the fact. But the Ipsos poll showing that only 6% of non-homeowners will be entering the market when the bank cuts between 25 and 100 does appear to bear that out, as that 50, 75, 100 basis points worth of cuts most likely won't be coming, if it comes at all, until later on in this year. With that said, we should get a much better idea of where the real estate markets are heading in about 3 weeks' time when we get the data out from the local boards for the first time following that Bank of Canada cut. We will obviously have an update out on that data on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.